Hello friends, it's Castaway Trader and welcome back to my YouTube channel. Today I have an exciting topic to discuss with you. The topic is, are we going to get a summer rally in July 2022? And this is a seasonality chart of S&P 500 and you may have seen it, and according to that chart, normally S&P goes up in July and August. Let's discuss the topic today, but before we start, I would like you to read that important disclaimer. I am not an official financial advisor and past results are not indicative of future profits, and I share in that video my own analysis, but please consult to your official financial advisor before making any big decisions. Okay. I would like you to subscribe and follow my free blog post on medium.com, and you will find me. I will share the link to my blog post in description of that video. That is important because today I will be discussing fractals that I posted on medium.com, and together with fractals I posted several articles explaining how that ABC fractal works, how we can pinpoint completion of that ABC fractal, and how we can expect a bear market rally in wave C up. And this is exactly what we will be talking today in that video. Again, please subscribe to my YouTube channel, give me some likes, that would encourage me to record more videos. So this is how medium.com looks like, and recently I posted several articles explaining that fractal, a secret path for a bear market rally. And you can also read impulsive versus corrective waves if you're not familiar with Elliott wave analysis. And I would like to explain first my general opinion about S&P 500. I believe that the drop into March 2020, a pandemic low, was a low of the major wave 4, and of that major wave 4 of that bottom we got ABC up structure that topped in January 2022, and in my opinion that was the top of wave 5, the whole rally that started at the lows of 2009. And once a 5-wave up rally gets completed, we would normally expect a large ABC corrective structure that would initially target the low made by wave 4. That means that S&P should be expected to hit the low made in March 2020. Let's look at S&P 500 chart, and this is the top made in January 2022, and let's look at the low made, pandemic low made in March 2020. So this is that chart, and you can see 5-wave up, a micro corrective ABC structure that was subwave B down of wave 5, and the final run in subwave C of wave 5 that topped in January 2022. Let's come back to that same fractal, 5 up, 3 down, 5 up. This is what we got, and this is why I think we are not going to see higher highs over the high, over the top made in January 2022. Now you can look at my article posted on April 4th on medium.com, the most common structure behind a pullback in the stock market. We are going to look at the fractal posted in that article, that standard ABC down fractal. If we topped in January 2022 here, so we would expect a large ABC down structure where the first leg down would itself be subdivided into 3 waves, and it would look like ABC down structure. So let's come back to the chart of ES-mini, and you can see that was the top. We got ABC down, that was A, ABC up, that was B, and 5 down, that was C, and together they comprised the first leg down that had a red label A. Let's come back to the structure. So this is the bottom we made in February, and of that bottom we would expect a corrective pullback. and we got a corrective pullback, A up, B down, C up. Note that B down itself was subdivided into A, B, C, and the final rally. Coming back to that fractal, that final rally, that bear market rally. And in that article, by the way, I explained in detail how you can actually expect that ABC down structure to unfold. But there is another great article here, which is called A Secret Path for a Bear Market Rally. And in that article, I was talking about the very same simple to learn and simple to practice corrective fractal. But in that particular case, I actually focused on that second leg up, because in any corrective ABC structure, that by the way, that structure was played by ES-mini as well, and in any corrective ABC structure, the second wave up, the second leg up provides you with the best trading opportunity. So in that particular case, I studied several corrective structures. So that one was from April 2022, pretty fresh one, and you can see we got A up, B down, C up, and that C up was structured as 5 microwaves up that hit 66.7% retracement of the preceding decline, and that was the top of that corrective bounce. And when we deal with the corrective bounce, we expect normally another push down that would make a lower low. So that was a great shorting opportunity. So using that fractal, you can actually squeeze both long setups and short setups out of the same corrective ABC up structure. Let's come back to the actual chart of ES-mini. So we got A down, we got B up, and now the main question is whether C down, the second leg down, actually completed, whether it has bottomed, and whether we can start expecting a corrective rally. So my general expectation, we are not going to get a huge rally out of that low. We are only going to get another corrective ABC up structure. Again, we saw several corrective structures, and we are going to get something like either that one, small push up, very strong push down that easily tests the low, the starting point of the first push up, or even undercuts it slightly. And in that particular case, subwave B undercut that low, and after bull stepped in, we pushed price back up and we started the second leg up in subwave C. And very often you will see so-called expanded flat structure, where even a corrective wave B manages to push price to a new lower low. But once bears fail to actually break under that low and bull step in and push it back over that important level, so that triggers a failed breakdown setup, and this is when we get those crazy short squeeze rallies. And this is how normally subwave C in the corrective ABC structure looks like. Or we can get something like that. Look at that yellow box. We got A up, B down, C up. Look, B down actually 2 times approached the previous low, the starting point of A up, but we could not break under that. Or we could get something like that. This is another ABC structure. I'm just showing you that market keeps playing the same ABC structure, and you don't need to learn a lot of things just, to successfully trade it. Because market essentially keeps replaying the same fractal, and ABC up, ABC up, ABC up. So my general expectation, we are going to get another ABC up here, and that first push up labeled A would itself be structured as ABC. That second leg down in wave B would itself be structured as ABC, and the final push higher would most likely be structured as 5 waves up. And again, this is how that fractal looks like. and we are talking about getting a pullback, which is shown here in black color. But that is the bullish setup. That is the bullish count that actually assumes that the second push down, the second wave down in wave C actually made its bottom. It's important to note that normally when we deal with ABC down structure, wave C in many cases would stop at 138.2% extension of a wave A. We measure that distance, we projected from the top of wave B, and we got 100%, which itself was an important level, but I keep telling you 100% is a cheesy extension, everybody knows it, and this is why it's not a reliable one. It can produce a bounce, it actually produced 2 bounces here, but do not get married to that 100% extension. You should learn the real stuff that works, and the real stuff is 138.2% or 123.6%. And I teach those small details in my video courses. If you go to castawaytrader.com, you click education, and I have 3 video courses. If you don't know much about the market, I would suggest you start from the basic course, how to trade with a trend, that would explain you what trend is, how to distinguish bullish trend from bearish trend. If you are ready, if you think that you know the basic stuff and you're ready to start learning waves, go to intermediate, and here you will see the first course. Normally I charge 69%, but now because it's Father's Day, happy Father's Day everybody, you can get it for $49.99, and that offer would be valid for 2 or 3 more days. And I will post a link to the discounted code to get that course for $49.99 in the description of the video. And in that course I will explain you what impulsive waves are, what corrective waves are, what the main extensions and retracement fibs you should use in your trading. And once you feel like you start understanding how waves work, I would strongly recommend you to step up and subscribe to my second course, to the third course, how to trade like a pro, because in that course I'm trying to convert your knowledge about waves into some particular trading setups, because every analyst likes to talk about waves, likes to put counts on a chart, but they don't normally tell you what waves should be considered as a long setup, what waves should be considered as short setup, and what is a trigger for your short or long, what is your stop loss. And this is what I explain in that course. Strongly recommend you. There are hundreds of students, you pay only once. You don't depend on my website, because those video courses are hosted on udemy.com, the largest educational platform in the world with tens of millions of students. Let's come back to ES-mini. So this is our bullish setup. Our bullish setup says the bottom has been struck, and the bottom was struck last week, and we should expect ABC move up to test something like 3,900, 4,000 in S&P and ES-mini, followed by a deep pullback in wave B down and another short squeeze to 42.20 or 44.20. So what is the bearish count? Let's look at the bearish count, and this is the bearish count. So the bearish count says, so basically the concept is the same. We are dealing with A down, B up, and C down structure, but the bearish count, I call it the most bearish count, says wave C down has not bottomed yet. And the problem with the bullish count, let's come back to that. The problem with the bullish count is a sharp drop in microwave 5 down, which does not really look like wave 5. If you look at that classical flat corrective structure fractal, you will see that the second leg down is normally subdivided into 5 waves, and it would be so nice to have a clean subdivision in wave 5 down, ABC subdivision. You see that zigzag, that's a clean subdivision. So we can clearly identify 3 segments: subwave A down, subwave B up, subwave C down. So that's the theory, right? The problem is when we deal with corrective structure, we should not be that obsessed about this theory. So we could get a push down that would make a lower low, so wave 5 would be lower than the low made by wave 3, and that could be it, and you could be waiting for B up, C down, and it would never come, and you would just miss the train, you would just miss the move up that you have been waiting for so long. And that's actually a great article, The Most Common Structure Behind the Pullback in the Stock Market, that reviewed that same case. So look at that drop. We are talking about the low made in February 2022. So look at that. So we could have counted that move down as 5 waves. So look at that. So this is A down, B up, C down, and that was supposed to have a clean 5 wave down structure: one down, 2 up, 3 down, 4 up, 5 down. But look at that strong wave 5 down. It's almost as strong, actually it's as strong as wave 3, which is not very typical. And you could say, you know what, I would count it as 1 down, 2 up, ABC of 3, 4 ABC down. And that was a trap, that was a typical trap for Elliott Wave traders, because in majority of cases, Elliott Wave traders, they blindly follow classical fractals. We say this is a fractal, this is how it should look like. It should look like that. It should look like wave 3 is the strongest one, a nice ABC up, another ABC down. And in many cases, the real life says, like, you're not gonna get it. And this is exactly what happened in February 2024. We got that huge drop, strong drop, at the completion of the whole ABC move down. And this is, by the way, exactly what we have now. Just look at what we have now. We got 1 down, ABC of 3, ABC of 4, and boom, very strong move down. By the way, that move down by that moment is not stronger than wave 3. You can quickly measure that. We can use Fibonacci tools, extension lines. We measure wave 3, we project it from the top of wave 4. Let's add 76.4% extension. Let's add 100% extension. So what you're gonna see is that we tagged 76.4% extension of wave 3, but we have not actually extended to 3550, which is 100% extension of wave 3. So as long as we over 3550, wave 5 is smaller than wave 3. So it's a viable scenario that the whole ABC move down of the top made in January actually has already bottomed. But we still should take in our mind that bearish structure, and under the bearish structure the wave C down has not bottomed yet. And what's important about that structure is that if it's the real story that's going on here, what we should do, we should measure subwave A of 3, we add extensions, and we got 123.6, 138.2. This is exactly where ES bottomed last week. Another way of nailing the bottom of wave 3, we measure wave 1, we project it from the top of wave 2, we get 138.2. 138.2 is 3620. This is where, in theory, we could see ES dropping over that long weekend, or maybe on Tuesday, and from where we could get a corrective ABC up structure to 3820 or 3880, because when we deal with wave 3 down followed by corrective wave 4 up, what we do, we measure the wave 3 and we look at two retracements 33.3, 41.4. Nobody would tell you that except me, because I found those ratios by making thousands of trades every year. And I've been practicing that modified version of the Elliott Wave theory for at least 4 years, I guess. You could say it's not long enough, but look, I've been posting at least 100,000 counts for my subscribers. Just imagine how much you can learn by counting 100,000 charts, doing that by 4 consecutive years. So believe me, I know what I'm telling you about. So this is so-called compressed 5-wave down structure, where wave 3 normally hits 138.2 and wave 5 normally finds a bottom at 176.4. This is 31.12. Now, I want to show you one important thing. Let's come back to that first rally of the pandemic low made in March 2020. Look at that first 5-wave up structure labeled as wave A. Look where it topped, at 35.20. And look at those fibs. So if you measure the whole move up, the whole rally of the low made in March 2020, up to the top in January 2022, and you add my two favorite retracements, 41.4 and 44.1, and you can also add 50%. You can see that 41.4 was 36.85. This is exactly where ES is getting support. Look at the second, my favorite fib, 44.1, 36.12. Again, it's very close. You see, we create a cluster of fibs together with 138.2, which is 36.50, together with 36.85. We are not too far away when you deal with several 100-point move. So that's an important cluster of fibs that actually can stop the decline. Now let's come back to the bearish count, and again we just reviewed the bullish count, and as the bullish count the bottom has been made. Under the bearish count you can see that we can get a pullback. And now you can ask me a very normal question. So what is the benefit of using the Harmonic Elliott Wave theory, modified Elliott Wave theory, when you still have several scenarios on your table? And that's a great question, and I have answer for you. Yes, there will be times when you will have several alternative scenarios. And when you have several alternative scenarios, you can get two outcomes. When two scenarios point in one direction, like we have now, under the bullish scenario, the ES made a major bottom and it's supposed to go up. Under the most bearish, even under the most bearish scenario, ES is has either made the bottom of wave 3 or could make a bottom at 36.20, 36.15, and it should also turn up even under the most bearish scenario and produce a corrective ABC up structure targeting 38.20, 38.80. So this is when you can use those two counts for your benefit. So you manage to turn complete uncertainty caused by several alternative scenarios into some limited certainty, because that limited certainty comes from the fact that those two different counts, wave counts, point in one direction, at least for the next move up. And that next move up, by the way, can go from 36.90 over 3800. So we are talking about 100-point move or 3% move. That's big enough for any trader. At the end of this video, I want to introduce you my second project, which I called Monkey Makes Money. It's a suite of proprietary indicators for TradingView charting platform. I would ask you to follow my Twitter. I have the second Twitter account, Monkey Makes SSS, Monkey Makes Money, and read my blog, Monkey Makes Money on medium.com, where I describe how those indicators work, and they can actually supplement your wave analysis. So those indicators help me big time when I try to nail reversal point either for a corrective pullback or an impulsive rally. So this is medium.com, and those are my articles about those indicators. So that is the first one. Again, I will share a link with you, and in that article you will see how I explain that indicator works, and that indicator, as you can see, prints, it actually detects underlying cycles, and it draws in real time potential zone of resistance where price can turn down. And not only that, it tries to find actually trading setups into that. So it converts that information about support and resistance into trading setups. And here, for example, you can see short pullback setups, and here as well you can see that when market starts trending, the algo detects that, and it starts suggesting you great entries and exit points. And here as well, so it works equally well in uptrend, in downtrend, and sometimes it can actually find you great entry points when the market is bouncing between support and resistance. So read about that indicator, you can ask me questions, and I will post in description of this video a link where you can subscribe to that indicators. You can use them for 2 weeks, and if you don't like them, just let me know within those 2 weeks, and I will cancel your subscription and I will refund your money. At the end, I would ask you to leave me a like for this video. It takes me hours to prepare each video. I would really appreciate that. And please subscribe to my YouTube channel. That would make me feel great. Thank you so much, and let's hope that we're gonna get that rally in July and August 2022.